Welcome to the Breaking Into Finance podcast. My name is Craig Thompson, and this is the open source field guide to help you understand everything you need to know about breaking into finance. Let's dive in. Hey everybody, today I am thrilled to have on Joe Magdovitz on the show. Joe is a VP and head of finance at Vouch Insurance, and this is keeping in the theme of talking about exit opportunities and the wide menu of potential things that folks do after careers in banking, to the extent that they aren't staying and becoming MDs and partners or going on to pursue careers in investing. So had a really great conversation with Joe, and we'll spend most of the time talking about kind of what being a finance lead at a startup all the way through a public company looks like. I will note, though, that Joe also worked for the Fed in his first job after banking, and we had a fascinating side conversation about that. So that I'm not going to post in this episode. I'll post that separately as kind of a continuation about what the Fed does and how the Fed does it, because I actually really learned a lot from that conversation. And so without further ado, here's my conversation with Joe. Hey, everybody. I am here today with Joe Magdovitz, and Joe is the title is the head of finance at Vouch?
Yeah, VP and head of finance at Vouch
VP
Insurance.
and head of finance. To start, I'd love to hear a little bit about your quick background and how you found yourself in your current role.
Yeah, absolutely. And thanks for having me on, Craig. It's a pleasure to talk today. So as you mentioned, I'm the VP and head of finance at Vouch Insurance. So what that means, we're about a 200-person Series C startup, 5 years old. I've been at the company for about a year and a half or so, and am responsible for everything from financial planning to accounting, audit, and tax, investments through our insurance company, capital markets, and M&A. A lot of things. You can think of me as kind of like a generalist at a very young company, but that's what keeps it fun. Quick background, I started out in capital markets, I think similar to yourself, did investment banking in New York for a couple of years, then got a really cool opportunity to be a trader at the New York Fed, also in New York, and after that went to business school, and since business school I've largely been doing corporate finance roles at tech companies. So started out at a public company at eBay, and then have been at 3 growth tech companies since.
Awesome. And yeah, just to dig in a little bit more about kind of what your current day-to-day role is, Series C is definitely kind of this hybrid of, you're not quite an early stage startup anymore, but you mentioned wearing many hats. So I just love to hear kind of what life is like, leading the finance function at a Series C company.
Yeah, great question. And I think if you asked 10 Series C finance leaders, you get probably 15 different answers, depending on the day. So for us, maybe I can go in specifically for Vouch Insurance, but we're truly an insurtech. And so kind of 2 words there. We have, we're 5 years old. We have a very large or meaningful tech organization as a part of our whole company. We built our own kind of operating system, as well as website, go-to-market functions, Salesforce instance. So like very much a startup tech company. At the same time, we have a regulated insurance company in Illinois. So we have a balance sheet, we take risk, we have investments. So what that means for me is my day-to-day is very different depending on the day. For instance, right now we're planning for 2024. And so what that means on the tech side of the business is working with business partners to look at business segment LTV to CAC. And we can go into that if that's not an acronym that people know, and how to optimize that. Also, on a different day, could be working with reinsurance advisors on how to optimize capital and kind of how we support our insurance company as well as our insurance program. Or it could be really functionally oriented. It could be working across product team, the operations team, the marketing team to align goals and data and how we look at things, and implementing new software. Really could be any of the above.
And just to double click, I guess, on one of those. So LTV to CAC, I think for folks who've listened to our like venture primers should be familiar with that KPI. But for those who haven't or need a refresher, it's customer lifetime value relative to customer acquisition cost. So basically measuring for, new customers that you're onboarding and bringing into the ecosystem, what is kind of the margin you expect to generate from that customer over their lifetime as a customer, relative to what is the cost of advertising or kind of whatever other outreach you need to reach them. But I guess, so when you talk about optimizing that or working with your sales team, how much of that is going to them and saying like, hey, like, here's what the math says about what we've been doing historically, versus is there any element of like, I notice you're doing this, or I notice that this particular customer type is lower yielding and customer like I guess, like, how much is it the mirror versus the flashlight of kind of like helping develop insights versus just being like, hey, just so you know, here's where we are?
Yeah, it's really all of the above. So I think just showing the historical is really important, but not going to get the company to kind of an incrementally better place. And so what we do is we first kind of like being a head of finance or a kind of an FP&A leader at a startup, you'll probably have to define what LTV to CAC is and kind of how you take your expenses and revenue and estimate how long you're going to keep a customer and your marginal costs and kind of all that junk, and get it into a consistent and repeatable definition that you can measure. So one, that takes a lot of work, and kind of getting that historically. As a young company, financials don't come out in like a really perfect way where you can just manipulate them and get to the answer you want, like you would at kind of a public company or kind of as a banker pulling financials. But what we're doing as a Series C company that has pretty mature accounting and good kind of a good discipline around org structure and definitions and such. What's really helpful for us is building a calculator and showing them the levers that actually influence the calculation of LTV to CAC. So if we increase average premium, which premium is kind of our ticket size, revenue equivalent, and then we grow this customer over years 2, 3, and 4, what does that do to LTV? If we reduce the time spent on underwriting a client, what does that do for our marginal costs? And then you can build that understanding and give them a tool so that they're thinking, the operators, the product people, the sales people, the tech people are thinking about it in the same way as you are as a finance person. And then it kind of lives on beyond that one interaction.
Yeah. And I know every company is different, but you've worked at a few companies kind of strewn from the, mid stage to late stage venture and all the way into, eBay's public company. Could you talk a little bit about, if someone is thinking about going into like the FP&A function or, wants to become a finance leader at a company, how have you seen the role change across stages of company? And if you were someone who's, say, maybe fresh out of business school, maybe has a couple of years of banking experience, do you have any recommendations of starting at a public company or starting earlier?
Yeah, it's a great question. And I think we talked a little bit about this the other night, but the way I think about it, kind of, maybe I'll start with the question of kind of different stages and kind of where I think I add value, and maybe that'll add a little bit of context. So finance isn't that different from other operating roles in how from an early stage company to a later stage company, you increase in specialization. So in an early stage company, whether you're the first finance hire or the first product manager or salesperson, you're going to be doing a lot of things that aren't traditional finance or traditional product or traditional sales. And that's just kind of like the reality of it. And so at a seed stage company, Series A, you're probably figuring out how to get the information to do accounting to a third party if you don't have that background. Or hopefully, if you're like myself and you don't have an accounting background, you're not actually doing that yourself. You're also setting up your payment flows, opening bank accounts, connecting it to Stripe, optimizing that, sending out credit cards, like very foundational infrastructure stuff that if you're coming from an investment banking analyst world, it's maybe very different than you'd expect for like a title of FP&A head or something like that. And as you get more kind of into the growth range of companies, it becomes incrementally more specialized. So you might have a general FP&A person, and maybe he doesn't touch accounting, but does expenses and financial modeling. If you go to a Series E company, you probably break apart those responsibilities. And then when you go to a public company, it is super specialized, and you might be the person that focuses on the specific type of expenses at this specific business segment, and you have many layers of management in between you and ultimately what gets reported to the street. And so kind of the numbers are a lot bigger, but the scope of responsibility is a lot smaller.
And so this is one conversation I've had with a few other folks who are kind of in finance leadership roles at various stages of private company, which is, let's say that your goal is to be a public company CFO, and you have a choice earlier in your career. You could be the first finance hire, at a growing company. So Series B, Series C, you could be the first finance hire and you can try to grow with the company, or join a right pre-IPO company and, maybe you're, fourth in line or something like that. Like you're leading an FP&A function, but there are a couple layers ahead of you. So you can go through the, private to public process, or, just joining a public company and trying to move up the ranks. Do you have any views on kind of optimal places to start, or some frameworks for at least thinking about that question?
Yeah, no, it's a really good question. Maybe I'll just talk about what I was optimizing for at different stages, and maybe what I was and wasn't thinking about, but kind of like how it benefited me later. Maybe that's a helpful way to think about it.
Perfect.
So the first part of my career was, if you look at it, you might not think it's totally linear, and it definitely wasn't planned out in like a very linear path to do exactly the things I did to get to where I am now. But what I optimized for was learning a ton from people who had really deep experience in their different areas. And the different areas in the first part of my career, I would say the first part of my career was really learning, and it was banking, working at the Fed, and working at eBay. All very different, but all very analytical roles in big, strong organizations with kind of a deep product set, or kind of subject matter set, where I could see a lot of different things, learn from really experienced people, and kind of just soak up everything around me. The next part of my career was really the growth stage companies, being at smaller organizations. One was 300 or 400 people. One was about 1,000 people, and that was kind of like a pre-IPO company. And where I'm at now is about 200 people. And so that is really about having talked about the scope of responsibility, having a really wider scope and ability to take those things that I learned and impact a business and impact people, and kind of make decisions and kind of see those through and how they impact the organization. As I think about like what the right, or what the clearest path is to get to that public company CFO, not totally sure. I think each person is going to have a different path, but for me, I think breaking it down into those two parts of my career, into like really learning from deep experience and really strong leaders, was super helpful for me and all the different aspects of my job now. So now is being in fintech. Fintech is super interesting because you have capital markets, you have investments, you have balance sheet. Most startup finance leaders don't have to think much about a balance sheet. And if you're at a public company and you're an FP&A leader, you never have to look at a balance sheet, which is kind of interesting. But fintech is super complex, and the combination of my experiences has kind of enabled me to hopefully be somewhat successful here.
You talked about the importance of that learning part of your career starting out. And one question that I don't know that I really know the answer to is kind of the role of the investment banking experience in that trajectory. Like, I think for me, it was just such a career accelerator, both the logo and the learning. Like both were like really important. And so I guess one question is how important do you feel like that investment banking process was for you? And hard to put yourself in someone else's shoes, but if you have any advice for someone who maybe is a senior or maybe is 1 or 2 years out of undergrad who didn't get that investment banking job, but is still interested in kind of the finance track broadly, are there types of other roles that provide high quality learning for someone who, long term might want to follow a trajectory like yours?
So for me as a college student, I was an economics and psychology major. I in a liberal arts college.
At
was
Cornell,
not
it's okay to name drop. Is it Cornell?
Cornell. And I wasn't one of those college students who was like dead set on doing investment banking and then doing working at a fund after investment banking and kind of like having that linear approach to thinking. I really just wanted to do something. I wanted to be in New York. My college girlfriend, now wife, was heading to New York, and a bunch of my friends were. So that seems like a good place to be. And I'm originally from Philly, and so wanted to end up there and wanted to do something first and foremost analytical, where I could work a decent amount and really learn, because I hadn't had a ton of professional experience throughout college, just a couple of internships. And two, if I could do that kind of first and foremost, and I could do it in a place where I was either focusing on something economics related or capital markets related, kind of even better. And so ended up being really fortunate, getting a job in investment banking. Learned a ton about global markets, capital markets, and kind of professionalism, just being at a professional services firm and what that meant, in good habits. And that was actually a theme at eBay as well. So one thing about like joining a startup as the kind of head of finance at a 5-person startup right out of college, the one like that, a lot of successful people have done that. The one thing that you don't get is you haven't seen what kind of good hygiene, I call it, looks like. And so that was a really valuable thing for me to learn, both doing banking as well as being at eBay. And I think I could have learned it at both. They're just kind of like different outlets for it.
But just working at some sort of mature company where you know what the end goal is and what the end state could look like. So when you're off in the wilderness, you kind of have an idea in the back of your head of what you might be building towards.
Totally. Like when you're a finance leader at a startup and it's 200 people, 300 people, 400 people, whatever it is, people are going to look to you to say like, hey, Joe, like, what does good look like here? And you can get a certain amount of it from your peer group, from kind of reading from school, but like having seen it and having seen like being at eBay, and I was on the corporate FP&A team for a number of years, and so sat right next to investor relations and the CFO, and really just like seeing how they conducted themselves and kind of the checks that went into earnings releases and scripts and kind of what we published publicly. It's just a whole nother world. that just kind of helps you be more professional, have that hygiene when you're ready to be at a smaller company.
Awesome. And then this is another question that I get a lot from listeners personally, and I'm curious kind of what your take on it is the role of the MBA program and the value. Because I in some ways am surprised by how many people are surprised that I decided to go back to business school, which I think is a very common path. And just, a little bit on the decision process. You've now done a couple of years in banking. You've worked for the government. You worked at the Fed, and then you make the move up to Tuck, where I did Tuck Bridge, so I'm familiar.
Oh, nice.
With the real estate up in Hanover, but just would love to hear kind of what that process was like for you, if you went in, with a particular end goal, and any advice around that.
Yeah. So interestingly, I really loved what I was doing at the Fed. I learned a ton from people. So for people that don't know, the markets group at the Fed is the group that does trading, and so when there's quantitative easing and the Fed's buying 40 billion of treasuries and mortgage-backed securities, that group actually does that. They go into markets and they execute that. Also, when the Fed is targeting a Fed funds effective rate of X, that has to do with liquidity and in kind of overnight funding markets that's facilitated through Fed transactions. And so anyway, going off tangent, but really, really enjoyed what I was doing at the Fed and the markets group. It was relatively bureaucratic as you think about it relative to startups, and you needed some sort of degree to get past a certain point. And so the way I approached it, I was like, I would probably love to come back to the Fed and work here in a more senior role over a long period of time. It's just super interesting work. I was also interested in fintech and startups and kind of what being a finance person at a startup or a public company or tech company might look like. And so I went to an MBA program as opposed to like a policy program or a PhD, which are also paths that a lot of people who are in the markets group do. And I ended up getting I kind of had a non-traditional recruiting track at Tuck. So Tuck is really, really good at sending people to do consulting for the big 2 or 3. They actually send a lot of people to do banking. Most people don't go there to do banking, but because, as you know, a lot of the banks kind of have a certain number of students they want from each of the top business schools, it's ironically relatively easier to get a banking job out of Tuck.
Just when you thought you were out, they pull you back in.
Totally.
Yeah.
So I never kind of broached that was never like super interesting to me after having done it. Was really good to do it first couple of years, but didn't want to get back in. But anyway, I got really interested in fintech. That was in the 2013-14 timeframe when SoFi was getting up and becoming big. Lending Club was growing a lot. Funding Circle, Common Bond, like you name it. There were a bunch of them that were kind of challenging traditional finance, and it sounded a little more interesting than kind of the capital markets angle that I had been doing. And so investigated public companies that had finance teams that were really well respected for building finance talent. So eBay was actually an interesting one because you can look this up in the journal. Like a million years ago, they had an article about all the CFOs that like came up at eBay and like went to all these startups and like an eBay mafia type thing. And so that was really interesting. And There were a few opportunities where I could have, this is probably interesting for the listenership. There are a few opportunities where I could have gone and done a undefined internship at a fintech company that was like getting off the ground. Or I could go to eBay and do a more formal internship and kind of see what being a finance person at a 20-year-old, $30 billion public company meant. And so I decided to go with that. I found the business model really interesting. They had a great reputation for building finance talent. So all of this to say, I could have done this if I had the initiative and the time and to network and like really research what I found really interesting outside of business school. It's not the traditional, you go to business school, you go do consulting or banking or private equity or product manager or whatever. But I think what was really valuable to me was kind of having the dedicated time to think about really business, because being in capital markets, working at the Fed, you're thinking about things from a like 30,000, 60,000 foot level, but like really thinking, oh, with these case studies, is this something I'd be interested in doing, and having the opportunity through an internship to try it out. So not that's why it was valuable to me, but it definitely wasn't the kind of normal use case.
If you could give, a bit of advice or wisdom to your, 22-year-old self, anything jump out as what you might say?
Me kind of sharing these thoughts today, maybe it does, maybe it doesn't, but sound like I had a plan, kind of going forward, and wanted like the first part of my career to be really kind of a place where I learned a lot and did. 22-year-old self had no idea. It was just like, how do I gain more experience and kind of do it at the best roles I can get. I think it would just be kind of be patient, be willing to learn. Don't worry about kind of not getting promoted every year or getting the best new job every year. Patience and learning and being thoughtful is kind of the name of the game.
Awesome. Joe, well, thank you so much for taking the time. I really appreciate it. This was really interesting. Thank you.
Yeah. Thanks for having me on. This was a lot of fun.
That does it for today's episode. Thank you so much for listening. And remember to check out our website, breakingintofinancepodcast.com, where you can submit questions, join our Substack to stay up to date on new content releases, and much, much more. We'll see you next time.